welcome along. So today we're going to be talking about one of the most frustrating things associated with finding a trading opportunity, and that is, of course, avoiding what's known as a sucker rally. So sucker rallies are events where it pulls back, it starts to rally again. You're trying to confirm whether or not it's a good time to buy in on this pullback, or whether this little rally is in fact a sucker rally, which sucks you in, I guess, and then starts to go down again, creating a losing trade. Unfortunately, there's no secret method to avoiding every sucker rally that occurs, but there are a few little filters we could perhaps apply to our trading to help avoid some of them. Now, before we get into that, I'll bring your attention to the disclaimer ticking along the bottom of the screen there. So just remember that all examples given are for educational purposes only. Any advice given is general advice only. And of course, please be aware of all the risks associated with trading. So I'll leave you to look through or read that disclaimer as we're going through our lesson here today. And don't forget to like, follow, or subscribe to the Finexia channel for obviously more videos as we produce them. Okay, so there are a number of lessons on the Finexia channel about how I go about reading a trend, and if you haven't seen them, I would encourage you to go watch the trend analysis videos 1 and 2 on the Finexia channel to get more information on that. But in a nutshell, the basic concept of what I'm trying to do when I look at the start of a rally or a new uptrend getting started is, on the right-hand side of the chart here, we have a daily chart, and on the left-hand side of the screen is an hourly chart. So in this sort of setup, I'm looking at what I would define as short-term trend. So for me, the very beginnings of a new uptrend getting started would be a close above that 13-period weighted moving average there on the chart. And of course, any body lows, I guess, remaining above that is a sign the short-term trend is continuing nicely in that direction. But the very beginnings of an uptrend would be, first of all, a close above that 13-period weighted moving average there. Now, on the left-hand side of the chart, I've got obviously an hourly chart. The other indicator on this chart, apart from the 13-period weighted moving average, is the chandelier exit indicator. Now this is a really nice little trend following indicator. I use it a little bit differently to I guess the traditional way it's used. Essentially, when it goes from green to green or red to green, we'd say it's starting an uptrend, but then when it goes green to red, it's either a pullback or it's a change in trend getting started. I find that a little bit sometimes confusing as to whether I'm looking at just a minor pullback or a complete change in trend. So I use the indicator a little bit differently. So if I'm, for example, seeing a close above my 13-period weighted moving average here on my daily, what I'd look for on the hourly chart at the same time is for the green chandelier exit indicator to cross up above the red level out section of the chandelier exit indicator. And when we get that green chandelier exit line crossing up through that red chandelier exit line, we are confirming the start of an uptrend, in this case short-term uptrend, on an hourly chart. And as long as we get green chandelier exit lines running through here on the hourly chart, the trend is still up. As long as the body lows stay above that 13-period weighted moving average on the daily chart, the trend is still up. So in other words, I tend to ignore this flip from green to red in the middle here, provided the red chandelier exit line does not get below the green level out section on the chandelier exit line. So that doesn't happen until way up here, and then we start getting a downturn being suggested. That's also confirmed over here when you start getting a close below that 13-period weighted moving average on the daily there, and confirmed obviously when the red chandelier exit line crosses down through the green on the hourly chart. So that was obviously the beginnings of a downturn being suggested. It does drop down, as you can see, and what I want to talk about now is what you're seeing next. So if we start with the daily chart on the very right hand side of the chart there, you can see what could be the beginning of an uptrend there being suggested. You've got that first close above that 13-period weighted moving average there. And so you might be of the opinion that's the end of the pullback and it's about to, continue a new uptrend from this pullback low here. If we were to double check that over here on the hourly chart, you can see the green chandelier exit line is coming up. But for me, a new uptrend really isn't confirmed unless this green chandelier exit line can actually get above the red, which at that point in time, you can see it hadn't managed to do that. So this is what I would, at this stage, be of the opinion that this is really more likely to be a sucker rally than a true resumption of uptrend at this point, simply because the green chandelier exit line did not get above the red. And if we just drag that along now, we can see it, fair enough, it does continue to go lower. There it is dropping away. So it really was, you could say in hindsight, a sucker rally. All right, so if we move on to the next little bit of green there, we've got an attempt at closing above the moving average there on the daily once again. And there's the hourly chart. Just bringing that up to speed now so you can see that. All right, so there's that drop away section in there. Starts to rally again into here. And I'm just about on the same point, just a little bit more here. There we go. Looks like I'm on it now. There we go. All right, so that's the same section. There's the daily chart on the right-hand side. You got that test of the moving average, very borderline closing above it. We can see there was a bit of a rally that happened there on the hourly, but once again, notice how the green chandelier exit line on the hourly chart could not get above the red chandelier exit line. So once again, unless that green can get above the red, I would consider this little rally potentially a sucker rally and therefore be wary of it. And sure enough, it drops away, which you can see, and then we get another test of that moving average there. All right, so we'll just bring that down till we're at the same point now. Just trying to show you these sections that cause confusion for a lot of people. Maybe a little bit more. All right, so there's that same rally happening here. On the daily chart, you got your first close above the moving average there on the right. If we look at the hourly chart, you can see there's the green chandelier exit line coming up, but once again, notice it has not managed to get above the red. So you'd be suspicious, once again, that this little rally here on the daily and hourly is more likely to be a sucker rally. And sure enough, it breaks down again, and you're getting the idea. So now we have another close above the moving average now. So I'll just bring it forward. There we go, dropping away on the hourly. Just want to get that to the right point so we can talk about it. Getting close. Looks like I'm almost on it now. There. Okay, so there's our first close above the moving average on the daily chart there on the right. On the hourly, I've got the green chandelier exit line starting to track up, but certainly not crossing above the red yet. So if we just bring that forward a bit more, and we're starting to see the green coming up now, and I'll go forward a few more bars now, and so we can start to see that same corresponding section. So we're starting to see body lows now being supported at the moving average. So that's a good sign that it's trying to rally. Confirmation for me will be on the hourly chart when I get that green chandelier exit line crossing up through the red. So we're getting close. And now you're starting to see it now. There we go, just about here. All right, so on the hourly chart, we now have, if I can get that little thing out of the way, the green crossing up through the red. We'll just get to the same point here. There we go, on the daily, which is here. And notice all the body lows are sitting nicely above that moving average on the daily. A good sign the short-term trend is up and going well if the body lows can stay above that on a daily chart. On the hourly chart, we've got the green chandelier exit line crossing above the red there now. So at that point, we'd be confident to say this is more likely to be a new uptrend getting started. short-term uptrend with the hourly green chandelier exit line crossing above the red, and of course all the body lows still being supported here above the moving average or 13 period weighted moving average on the daily. And if we just drag that forward, that's basically what it's gone on to do. So trend is still up as long as we got a green chandelier exit line. Even if it goes to red, as long as the red chandelier exit line does not get below the green, you'd still be of the opinion that shorter term trend is still up on the hourly chart. And of course, as long as the body lows stay above the moving average on the daily, you'd be pretty confident the trend is up here as well. So that's an example of that on an index, which in this case is the ASX 200 index. Let's look at that on a stock as well, just so you can see a comparison to the same idea. And we can see, on the way down here on a stock, there's lots of examples where we get these rallies that sort of break up through the moving average. And the question is, is that the start of an uptrend, or is this the start of an uptrend, or is it this one? So once again, if we just drag this back a bit, we'll try and get to those points and we can just have a quick look at them. Okay, so I'm basically at that point there. Notice how the crosshairs align on the daily and hourly chart at the same point, which is really useful when you're trying to back test or road test an idea with your analysis. And we can see that on that section there, we got your first close above that moving average, which is there. But notice for me, the green chandelier exit line on this little rally up could not get above the red. So technically, you should have been of the opinion that that was more likely to be a sucker rally and the trend was probably going to keep going down at that point. Once again, if we move forward into this section here now, looking at the right, the daily chart, you can see a couple of closes there starting to happen above the moving average on the daily. If we look at the hourly chart, you can see the green chandelier exit lines, although they start turning up, they really could not get above the red. So once again, trend is still down as long as the green stays below these red chandelier exit lines. If we look at the daily again on the right, I'm just now moving to the next section where it starts to close up above that moving average there on the daily chart. And here's the corresponding section on the left on the hourly chart. Notice for me how the green chandelier exit line once again just could not get above the red. So be wary of that as a possible sucker rally, and sure enough, it does keep going down all through here. And obviously over here, we start to see the beginnings of an uptrend there. So it all starts with a close above that moving average there. Here's the hourly chart. We've got the green chandelier exit line going on here, but certainly at this point in time, it hasn't yet crossed above the red. So if we just drag that forward a little bit more, we get to the point there. Okay, so now it is starting to cross above the red chandelier exit line at this point here. So this section here corresponds to that section there on the daily if you just look across to the right. So it's just like your second close above that moving average there on the right hand side of the chart on the daily chart. And this is what it looks like here on the hourly chart as that's happening. So still in the very early stages of that uptrend, but we are confirming a new uptrend getting started, and this is less likely to be a sucker rally. So you'd be more confident to be buying this little rally than the other ones, because the green chandelier exit line on the hourly chart is now crossing above the red, which is backing up the closes above that moving average there on the daily as well. And of course, we run forward from here, and that's what it's gone on to do. It's green all the way. Notice all the body lows on this chart as well, how they've all remained very happily above the 13 period weighted moving average. Again, this supports the fact the short-term trend is up and likely to continue. So the trend is up as long as we have green chandelier exit line on the hourly. Even if it goes to red, as you've seen, in these sort of sections, as long as the red doesn't get down below the green, the trend technically is still up. As long as the body lows on the daily chart stay above the moving average, the short-term trend is technically still up. So we can combine the two time frames in this way to give us a feel for what the short-term trends are doing. Once again, if you'd like a more in-depth lesson on trend analysis, there are 2 previous lessons I've done on this, combining timeframes for short-term, medium-term, and even intraday trends that you'd probably find really quite interesting. So check out the Finexia channel for more detailed lessons on this approach. Again, I'll bring your attention to the disclaimer. Again, just a reminder that all examples are for educational purposes only. And please consider subscribing to the Finexia channel for future videos. So thanks for listening, and see you next time. Bye-bye.